I'm Charles Payne, and you're watching Making Money is America in a Recession. Check out this email from one of my subscribers I got just this morning. I've been a small business owner since 2006, and I've weathered some tough times, but January, February 2015 have been the worst ever for me. Something doesn't feel right. It feels like '08 all over again. Well, I got to tell you, it's hard not to argue something is not right with this economic recovery. In fact, check out industrial production. This number came out on Friday. Negative now for 5 straight months. Then, of course, there's GDP, right? That's how we measure all of these things. It could be revised in the first quarter to a negative number and then come in as a negative number for this quarter. That would be your textbook definition of recession. And, of course, if cornerstone foundations like housing keep slipping, that could actually be the case. Now, today we saw home builder confidence, and even though the number's been up, it's plateauing a little bit. It dipped from the previous month, and it came in today below the consensus. The industry was looking for it to be up. Instead, it came down 2 points and below 57 from just a month ago. So, of course, Main Street continues to feel, of course, like, hey, they've never gotten out of a recession. And to quote, this is the reason why. We'll quote Ronald Reagan. If your neighbor lost his job, it's a recession. If you lose your job, it's a depression. All right, guys, let's meet the investment pros. Back from Vegas, everyone's looking a little weary still. A long weekend. Paul didn't go with us, but he still looked like he had fun somewhere this weekend. Paul Dietrich, Fairfax Global Markets CEO and Chief Investment Officer. Hillary Kramer, looking fantastic. A&G Capital President, Chief Investment Officer as well. She had fun, I'm sure, in Vegas. Still glowing, right? Jim Awad, Plimsoll Mark Capital Managing Director, is with us as well. And, of course, Matt McCall, Founder and President of Penn Financial Group. And in Chicago, Steve Cortez is BGC Partners Trading and Senior Strategist. And again, he is joining us live from Chicago. Guys, let's dig into the first real deal. I'm going to come right on and ask you, Paul, are we in a recession?
Well, look, here are the facts. We are having the slowest economic recovery since World War II. But there are a lot of good things happening in America. I mean, we're the largest oil producer now. Manufacturing is moving back to the United States. Employment is going up. We know what happened in the first quarter. It was disappointing. A lot of it was weather. The port
You sound like an Obama ad. What manufacturing is moving back to America?
You know, the thing is, we're not going into recession. We're going to see above average expansion, above trend expansion for the rest of the year.
Steve, I know a lot of people have learned how to celebrate mediocrity, including Wall Street, but I mean, if that's the best Paul can do, he may lose his gig on the next. I mean, come on, a lot of people feel like, rightfully so, maybe we've never even escaped recession.
Charles, you and I are not in that camp of celebrating mediocrity. Remember the Reagan days, by the way, of recovery, of 5% growth? By the way, that is America's potential. We can grow 3, 4, 5, 6% if we have the right policies in place. And I think we will, by the way, eventually. So long term, I'm still incredibly optimistic and bullish. But near term, I think there are a lot of reasons to be very, very worried right here. And are we in a recession? I'm not sure if we're in the technical definition of a recession, but we are darn close. And if you talk to anyone on Main Street, by the way, get out of New York City, get out of San Francisco, talk to people on Main Street right now. They are not feeling terribly optimistic about this economy. They are hanging on. They're not thriving.
Matt, I think that's a real point, right? To Ronald Reagan's point, it doesn't matter what the guys in the ivory tower say. A lot of people feel like they never got out of recession. There's a lot of hopelessness out there. Therefore, a lot of things that traditionally come with the rebound, whether it's, on the Main Street side, starting businesses, or on the business side, opening up real manufacturing and real capital expenditures. None of that's been around.
No, you and I, Hillary, saw that firsthand. We were in Vegas last week just talking to people. The pessimism, even from people that are successful, that still have jobs, that are making money in the stock market, and they're still a bit pessimistic on where the economy is going right now. And that is a concern for me, because with the consumer being such a large portion of this economy, eventually, you train your brain to not spend, to think pessimistic. And when that happens, our entire country's in trouble. I think we're going to snap out of it, but for right now, we are potentially on a downward spiral that could really expand and hurt this economy.
Jim, you've seen your share of rebounds. Certainly, I mean, even if you weren't a Wall Street person, you can see something is not necessarily right with this recovery.
Well, that's because it's bifurcated. The rich are getting richer and doing exceedingly well and better, and the poor really never got out of a recession.
Why is that? If they took moves, this administration took moves to make sure that wouldn't happen. They raised taxes almost immediately. They've made it tougher with regulations on businesses. Right. They deliberately tried to somehow artificially orchestrate a recovery that would focus on the lower end of the income ladder, and instead it got worse.
Well, that's because they were involved in income redistribution as a philosophy. If they had done what Ronald Reagan did, which is to lower taxes and lower regulation at a time when you had easy money, we'd be growing at 5 or 6% now. So you put it all together, and you have half the country doing well, half the country not doing well. You average them together, and we're growing at about half the rate that you would expect we would grow at this point.
You know, Hillary, Steve talked about GDP and, you know, the idea that we could have an annual GDP of 5-6%. You saw the GDP graph I had up there. We tickled 5% on a quarterly basis, maybe 3 or 4 times. But for the most part, we've been around 1% quarterly GDP. How does that happen in the most amazing dynamic economy ever structured in mankind's history?
Well, it's because we have a jobless recovery, and it's because truly manufacturing, as you said, is leaving the United States. But that being said, we've had other areas of development, and yes, the rich are getting richer, the poor are getting poorer, but those rich that are getting richer, they're spending a lot of money and they're making a lot of money. Just look at the stocks that made 52-week highs today. JP Morgan, Goldman Sachs, Blackstone. Wall Street is getting really rich. They're multi-billionaires now.
So it's all bifurcated. That's the chorus. That's what we're hearing here.
Well, I disagree. I mean, we've stopped the exporting of jobs to Asia because it's just getting too expensive over there to manufacture things and bring it back. And if you look
Paul,
at the jobs
this year,
coming
how many
back,
auto plants have opened in Mexico versus America?
Yeah, but we're getting German plants coming into the United States, and we're getting computer operations from China coming into South Carolina. They're building a $2 billion plant.
I mean, but just look, Paul, at a company like Cognizant, you know, IT outsourced to India. Looksoft, it's basically Russia IT.
So let me switch gears a second, because we've had a little bit of a debate, if you will, running debate on housing. The confidence number came in below estimates, still above 50, sure. So expansion. But without that pillar, you know, I think that's the main pillar for Main Street. Yep. Main Street has always taken their pulse and their wealth based on the housing market. And for a lot of people, that hasn't come back yet, Mike.
No, but even if you're not even looking to buy a home or sell your home, I should say, and you just know that your neighbor's selling their home for more than it was worth last year, you feel richer. And if
but what if they're selling it for less than it was 5 years ago?
Well, I think that's okay. I think we're also realistic. We're not going to get back to where we were 5 years ago. Maybe not for another decade.
You mean the home prices aren't going to get back to?
The bubble prices? No way. No, not for another 5 to 10 years, really? In my opinion. No, I just don't think that's impossible.
Go ahead, Steve.
Charles, if I can say, listen, and look, I'm not nearly as negative on the stocks as I was, because this sector has so underperformed if you look at the XHB. So, you know, I think that my pessimism so far has been correct on the stocks. But as far as the housing market overall, when we look at it, here's the sad thing, is housing starts, we're struggling to get to an annual rate of 1 million new single-family homes. We were at 2 million. Now, that was a bubble number, okay? We were at 2 million pre-bubble. But the thing is, we were at 1 million in the early 1990s, okay? That's when the show Home Improvement, sure. Speaking of housing, that's when the show Home Improvement was popular, when Pamela Anderson burst on the scene. I was a big fan, by the way, as a young man.
Hey, listen, you're taking us all down memory lane, and Jim is getting all crazy and excited over here.
Here's the thing,
Steve, you took the victory. We got to go, buddy. You took the victory lap. So far, you're winning on the housing thing against Matt, and Matt is stewing over here.
It's up 4% this month.
All right, hey, guys, let's leave it there. You know what? There's one smart, hardworking high school kid. He was accepted to every Ivy League school. We're talking all 8 colleges, but guess where he's going? University of Alabama. Is it time for these rich schools to finance their expensive degrees? Hey, if you're going to charge $100,000 for a degree, put your money where your mouth is. Tweet me, and we're going to discuss it next. Welcome back. Over the weekend, we heard Ronald Nelson. Now, that's a student from Memphis, Ohio, who was accepted to all 8 Ivy League schools. Well, he's decided to go to the University of Alabama. Now, this despite his 4.58 weighted GPA, the 15 AP courses he took. Now, Ronald and his family was simply worried they could not afford the cost. His middle-class parents looked at it, they crunched the numbers. They didn't think they could get him through an Ivy League school, not for 4 years. Plus, none of them offer merit scholarships. Last week, I got similar news. My niece, who was accepted to Columbia, but her working parents couldn't afford it, so she's off to Temple, which is a great school, and she'll do fine. But why couldn't Columbia finance her degree? Consider all the industries out there that finance their own products to their consumer. These guys have the cash. You want to see how much cash they have? Harvard's got $36 billion. Yale has $24 billion. Princeton has $21 billion with a B dollars. These guys have all the money they need. So why have the gall to ask for all this money for the degrees? I think it's about time maybe they consider putting up their own money. I mean, think about this. The taxpayer's share of college debt is racing toward $900 billion. So why should Main Street be on the hook when the same hardworking men and women can't even get scholarships for their own kids to get into these great schools without putting everything they own on the line? After all, the cost keeps growing and growing and growing. Look at this, guys. By the way, this is where we are this year, $35,000, your average tuition. I say maybe it's time for these rich schools to pony up the money. All right, guys, that brings us to our next real deal. Jim, you know, if car companies can finance their cars, department stores can finance their department store stuff, why can't these colleges finance the degrees?
Well, actually, I'm a veteran. You'll see I'm wearing my Wake Forest tie, and I put 4 kids through college. But the reality is the majority of kids are on scholarship. I think you'll see that the full pay students are
who's paying for the scholarships?
The point is, it's not the full pay. The full pay parents are paying for the scholarships, as are the endowment and the contributions to the endowment and the capital campaign. The point is, even though the majority are on some scholarship, it's not enough. You're still ending up with the record student debt. So whatever they're doing, their business model isn't what it should be to give the education they need to give and to help these kids.
I think their business model is great as long as they can get Joe Blow to pay for it. I mean, this is what I don't get. You know, in this whole fair atmosphere where we're being told that successful people should pay for unsuccessful people.
Well, what they're doing
the businesses should have to pay. Why can Harvard sit on $36 billion and kids can't go to the school?
And what they're doing is they're pricing the full pay.
Of course they are, because they don't finance it.
Right. So what I mean, what they ought to do is set up a private vehicle, bring in a private company as a partner to figure out a way to lower their costs and increase the tuition, the tuition credits for poor people. There's a better way to do this because they're running out of full pay
it's
parents.
not just poor people. I'm talking families would make 6-figure household income still. Matt, they got a tough time putting kids through college.
Yeah, I mean, you could have a father who's got a small business in Kansas doing extremely well, you know, with 3 kids. He's not ever going to be able to afford to put his kids through. But I think exceptional children, whether it be academics or athletics, should be able to get something. College is a privilege, though. Not everybody should be able to get it. It's a privilege, though.
It's up to $65,000, these schools.
Oh, no, yes, and more, much more. So, Charles, you make a great point about securitization, about the banks. Why aren't these institutions, they're in every other business, they're in all sorts of ancillary businesses, why aren't they set up with some kind of banking system where they offer loans, and then they could even securitize a loan out, but still have some skin in the game?
I think, Steve,
I think it was the best point ever.
Steve, I think they're a favorite nation kind of thing. I mean, listen, they're part of that elite cabal that somehow don't necessarily have to deal with the economic realities that everyone else does. And if the federal government is pumping out this kind of money, let's be clear, overall student loan debt is $1.3 trillion. Since the Obama administration has taken over, the private sector part, the taxpayer part of that, has gone through the roof. Why would some cab driver have to fork over his taxpayer money and his own kids couldn't probably go to those schools?
No, Charles, you are exactly right. By the way, this is a distortion by government, and there's no other answer here. That's what's going on here. It's a manipulated market. It's not a real market. If there were a real market right now, the supply-demand curve would work in education. But because of government supports and government subsidies and student loans, which is a mini bubble that I'm very worried about, we get this crazy. But by the way, this young man who's going to Alabama, God bless him, instead of spending a fortune to go to the Ivy League to become a secular humanist communist, he's going to go to the University of Alabama. He's probably going to win a national championship, all right? And he's going to have a lot more fun while he's there.
He definitely will have more fun at the football games. Sure. Paul, hold on. We got to let Paul in because I don't know where you stand on this, but you have that professor, academic, you know, like, I feel like you're going to come in and defend the colleges just because you've got the look.
No.
You look like everyone's favorite professor.
No. I'm not kidding you. I look at the $35 billion, and if you figure just on a 5% return, that's $1.75 billion a year that they're earning on their endowment. You know, why isn't that money being used, and it's not in most cases, for these scholarships? Princeton did a study, I think it was 4 or 5 years years ago that they could have taken their endowment and given everybody free tuition that was accepted into the university. They chose not to.
Well, because they have various constituencies. They've got to support the athletic program. They got to pay for the professors. So within the budgets, there are a lot of people competing for that money against the students who should get it.
All right, guys, I'm going to also shift gears, but we're staying on the same topic, and it's a little bit different. Matthew McConaughey, now, he actually gave a commencement address to the University of Houston, and I love what he had to say. Take a listen.
Life's not fair. It never was. It isn't now, and it won't ever be. Do not fall into the trap, the entitlement trap, of feeling like you're a victim. You are not.
All right, now, listen. It's so funny because we're talking about how much the University of Houston paid $135 grand for the speech, 20 grand for commission, 10 grand for the private jet. Still, I love what he had to say. Hillary, listen, we say that all the time. You know what? Life is simply not fair. In my mind, you're born in America. That's a beautiful thing. That's a great equalizer.
Right, and the students cheered Matthew McConaughey on. I mean, they were
I didn't even know what he was saying, though, but I'm cheering him.
And they were very excited. But it is a lot of money to pay for. He also said that he played bongos naked. Now, I don't know if it's worth $135,000 to know that
All
fact.
right, so we don't have much time left in the segment. Did you agree or disagree more or less with that?
Absolutely agree. I think it was worth every cent to get that kind of information.
Matt?
I agree, especially coming from somebody in Hollywood.
Take control of your life. Don't be dependent on the government or anybody else.
It's not Pamela Anderson, but what do you think, Steve?
Huge fan. You know, my driver on the way to the studio today was an immigrant from Romania. To hear him talk about America, it nearly made me cry, Charles. We are so lucky that we were born and bred here.
Absolutely. Amen. All right, guys, coming up, we've got an Ask Payne super speed round. In other words, we're going to try to answer as many questions as fast as possible. Keep them coming. Tweet me. I'm at CV Payne. All right, guys, time now to answer your questions about the market, individual stock strategy. Remember, that's what we're here for. Austin says, Charles, I'm thinking about buying some EOG. Do you think 88 is a good entry point, or is a shot to 85 still possible? Well, it's much higher than that now. It's one I've been pounding the table on. I offer you guys a free oil report. It's still available if you go to wstreet.com. I love it. I think it's going to do very well. Now, remember, one of these Titan of the universe guys, I think last week said to short it. I think he's wrong on this particular. It was maybe Einhorn. I think he's wrong on it. You can see the chart. When it retests that previous high, I think it's going to break out big time. You like this name?
I do. I think Einhorn's wrong, and for many reasons. And so I would be in EOG and these others E&P players.
You like a certain segment of oil, right? You think?
Yeah, one of the great things, oil went down by about half when it went down. Gasoline prices only went down about a third, and yet most of the refiners, their stock prices tumbled with the whole energy sector. These people are making a fortune because there's a big difference of the spread. And so I think the play is in refiners, especially as oil starts to
oil in general, Jim?
Well, what I would say is I think most of the drama is out of oil for this year. It went down too much. It's come back a lot. It probably shouldn't go up and down a lot from here. So I think it's going to be, if the stocks are up a lot, I think they're sort of market performers.
Right. Something tells me it has those perfect Fibonacci numbers, right? Down a certain amount, retracement of 50%, whatever you want to say. Some Fibonacci expert made a lot of money. So some of you guys made money too. All right, Tom says, is Keurig, NASDAQ, GMC are still a buy? Hold it to dump it, bought at 106. Ouch, it has been really painful. I'm still in it. I think it's oversold, but I will say this. Management admitted they made some huge mistakes last week, and the stock's not going to turn on that news. So I'm looking for a place to buy it. I think it's oversold, and I'm going to be pounding the table to add to it. Just not yet. Hillary, I know you like it, too.
I do like it, and I liked it after earnings, and I liked it even more after their big announcement on cold, this new cold drink. I would go for it because the mistake was on the mini Keurig machine, which is something that's a side business. It's not the main business, and Keurig will come back, and of course the shorts will get squeezed eventually.
I'll tell you what, they're celebrating right now, though, Matt.
Yeah, I mean, it's tough to buy a 52-week low. I would probably stay away if I didn't have it whole, but 52-week lows aren't a good thing in a market when they hit an all-time high.
Steve, would you touch this yet?
Charles, listen, you come to me, I'm the Colombian, I know about coffee, okay? So I will tell you here, and no, look, I actually think coffee stocks in general have done well, not this one, but if you look at Dunkin' Donuts or Starbucks, coffee prices have been in a secular bear market, and that is good news for the purveyors of coffee. So in that regard, I think there is a tailwind here that will be helpful eventually. So yes, I'm more positive than negative.
All right, Scott says Pollo Tanko looks like I picked the wrong day to stop drinking. Hey, listen, I know how you feel, Scott. I was up 25%. I held into the earnings. Of course, hindsight, maybe I shouldn't have. The stock, though, look at this chart. It still made a real good move off the low at the beginning of the year. I say stay the course. It was not such a bad beat. You like local? Mm-hmm. You like local?
No, I just been, since the first day of the show, I've been negative since that thing went public. I mean, the numbers are not that good. They're not growing. Of all the chain store sales out there, the restaurants out there, this is one I would go nowhere near.
Better than Shake Shack's numbers.
Let's go to Stephen, and Shake Shack's looking great, right? All right, Stephen says, hi, guys. Overweight in energy recently, looking for M&A and price rebounds. Have RRC, XOM, CHK, and WLL. Thoughts? I think you have too many of them personally. Now, CHK did get a downgrade from Goldman. I think it's oversold, though. Whiting is one that I've been pounding the table on. I don't see how you can go wrong with ExxonMobil. Okay, Steve, you've been telling people to buy the energy stocks. What do you think of those four names?
I'm less enthusiastic here, Charles, I have to say. I loved crude oil at $45, $60, it's kind of like air supply. I'm all out of love. I don't know that this is the spot now to be really constructive on energy. My guess, and I agree with Jim, though, I don't think we go, markedly lower from here, but my guess is energy gets kind of boring. We've had a big rally since
You must have been one heck of a Romeo in college, man. Love them and leave them. Real quick, Hillary.
Okay. You do not want to own XOM, ExxonMobil. It is not as safe as you think.
Well, what do you want to own?
Range Resources.
RRC.
RRC is really important here. Reserve growth of 28%. Capital budget, CapEx was $1.2 billion. Cash flow from operations, $954 million, but growing.
RRC is the one that Hillary likes. All right, guys, believe it or not, the Dow and the S&P hit all-time highs today. There's no confetti falling out of the skies here in New York. In fact, why is Wall Street getting so nervous? We'll tell you. All right, so what the heck is bothering Wall Street? I mean, really, why has Wall Street become so antsy? Is this how they're going to handle this lull? The rally sort of moving sideways and all these unknowns are beginning to mount? Looks like it. Just check this out. Last week, Stephen King, chief economist at HSBC, said, the world economy is like an ocean liner without lifeboats. If another recession hits, it could be a truly titanic struggle for policymakers. Are you serious? I mean, really going down the tubes like that? And then this morning, Bank of America, they issued a note as well, saying investors remain trapped in the twilight zone, the transition period between the end of QE and the first rate hike by the Fed and the start of policy normalization. That's scaring everyone. That's my man, by the way. You know that is. Trivia question. Who is that? Tweet me. Also, this morning, Goldman Sachs downgraded 19 stocks and upgraded only 9 stocks. What's bugging Wall Street, guys? All right, I'll go to you on this one, Jim, because you've kind of seen this before, and I got to admit to you, I get worried when Wall Street is so open with Main Street about its anxieties, and maybe we want to sell a few things.
Don't cry for them. They've gotten awfully rich in the last 5 years. But basically, everybody knows that stocks are not cheap. The question is, can they stay as expensive as they are? The valuations are not going to go up. And you have a situation here where the economy is not rebounding as fast as people had expected and hoped. Estimates are coming down. So the question is, are profits going to grow at a time when the Fed is about to start to take the punch bowl away? So if you have high valuations, deceleration of profit growth, and the Fed becoming a little bit more restrictive, it seems
like a perfect storm for some sort of a pullback.
It's a recipe for stocks not going up anymore. Maybe they don't go down unless you have an accident in the credit markets, but they don't go up anymore.
But we also saw the 10-year jump 8 basis points to 2.22% today.
I don't get it.
So if we're thinking that Fed's going to be raising interest rates, why would the Dow and the S&P have a great session, in my opinion, rally the second half of the day, close a new all-time high? As you mentioned, J.P. Morgan closing in within 1% of an all-time high. Just think about that in perspective. J.P. Morgan 1% from an all-time high. Biotech's rallying again. Housing market was rallying again today. So underlying, that tells me Wall Street strong. I don't care what they write in the reports. Underlying strength.
Well, Paul, do you think they're giving the same advice to their real big institutional investors that they share so nicely with Main Street?
Well, that's That's right.
I mean, work with me. I'm a little bit on the conspiracy theory thing here.
But the fact of the matter is, Jim's right. I think we're going to have a pullback. I think it could be 8 to 10%. The market is overvalued. Something's going to happen.
So the question is, do you simply ride that out, though? Wouldn't these large firms ride those out?
You do ride them out because the economy is slowly expanding, and we have not had a recession when the economy is expanding.
No, right. That's kind of the opposite. That's like saying the team that scores the most points wins, but I got you.
But everybody's talking about how we're going into a recession. That's crazy.
No, I think what you're saying is the conditions for the economy to stop expanding don't exist unless there's a shock from something like the credit market. But that means the economy can keep growing, but the stock market doesn't have to grow.
No, and we'll have a pullback. But hold on, because this is not a recession.
Everyone should beware, though, and not be selling and not be so worried, because all the technicals, and I'm not usually a technical analyst, but all the technicals are showing that this market is going higher, and it's going much higher. And if there is something that's going to crack, it's Greece, it's China, it's Russia.
But if those things crack, will our market crack with them?
Well, the money is going to flow into the U.S. markets.
But you're not rooting for Greece to crack, are you? You're not rooting for this to happen.
Well, that will ultimately happen. It has to happen. Greece is going to default.
Let me go to you. I'm going to ask Steve. Steve, who do we listen to, the markets, or do we listen to these Wall Street firms that are sharing their wisdom with us?
Well, no, I think we listen to the Wall Street firms. I will tell you, as somebody who caters and sells to the hedge fund world, there was unanimity among professional hedge fund traders that were going lower. I think that's one of the reasons that we keep going higher, by the way. Is it, in other words, so many people like me are betting against the market that the market is climbing that wall of worry for now. However, the market to me is on borrowed time. Right now, the market is threading the needle. There's a to justify multiple expansion, but enough growth to justify the Fed pulling the punch bowl away. And by the way, when they pull the punch bowl away, they're not going to just pull the punch bowl away. They're going to also call the police and have the party raided. I think it will be, this is a market that is high on cocaine, and at some point that will be rectified.
What he just said, it makes perfect sense for a bull market.
Right.
It's not strong enough for the Fed to jump in, but it's strong enough to keep going. That's exactly what we want.
That's what a lot of people want. Well, guess what? We do get them from time to time, and we are long overdue. But to Steve's point, I got to tell you something. It hasn't happened yet, and the average person doesn't make any money trying to pick a top. All right, guys, by the way, you do not want to miss Strange Inheritance tonight. Now, first at 9 p.m., Jamie Colby meets the family of a farmer with an unusual hobby who dies and then leaves him a giant collection of tractors. Then Jamie travels to a small town in Pennsylvania where she meets a man who leaves his family a struggling downtown movie theater and a whole lot of emotional things that go along with this. It's all tonight, 9 p.m. right here on the Fox Business Network. Well, Under Armour trying to make things right by veterans after, well, they pulled a shirt that critics say was very offensive. I think it was. But I also tell you, I think it's time these mea culpas from these companies are really needed. It's smart stuff. Will it be enough? Stick around. We'll discuss. Under Armour stopped selling a T-shirt that bears a similarity to Iwo Jima, to that big memorial on the scene we all know. Are they sorry enough, and did they do enough to overact the critics? Tweet me.
And now, it's time for Upon Further Review.
You know, last week, remember we were discussing these mea culpa apologies from these companies. Now, usually they come in two forms, usually with action, getting rid of the CEO, that kind of stuff. But more direct, they just sort of acknowledge to the public, we made a huge mistake. I think it's the way that businesses are going to operate from here on out. We just call it manning up, taking the hit. And that's what Under Armour seems to be doing right now. If they're very tasteless, some would say, T-shirt that appears to be mocking the Marines at Iwo Jima. But the company and its founder, Kevin Plank, may not have had a choice. You see, they have mounted quite a record of miscues recently. So, Steve, upon further review, was their swift apology good enough, or should there be concerns that their corporate culture may actually start to push people away?
No, Charles, I think it's enough. I do. And admittedly, I'm very biased. As you know, we've talked about, I'm a huge fan of this company and this amazing American success story. Kevin Plank, I think, is a wonderful man from all accounts. This is an oversight. In any growing company, you're going to have growing pains. Was this distasteful? Absolutely. To make some sort of equivalency between a basketball game and one of the worst, most deadly American battles of all time is clearly out of bounds. But the company, as quickly as it could, made recompense. And by the way, this is a company that has done very well by veterans. That has been incredibly generous with donating to veterans.
Especially with wounded warriors. You make a great point. But, Matt, some people were offended. You don't think people should have been offended?
I don't. I think that they're, if you look at it in my view, they're paying homage to the very brave men that put that flag up. So it's kind of showing that these young children want to be like them and follow in the footsteps of our heroes that made our country what it is. So I viewed it a different way. As far as the company is concerned, I think coming out immediately was the best thing, because the more it drags on, the more press it gets. Get it out of the way, get done, and move on from it.
Stock was up, I think, at least $1 today, right?
Yeah.
So, and it got hit recently on its earnings, where I think it got a little overhyped after the Jordan Spieth thing. But like Steve, I've been talking about this for a long time. But still, we saw what happened to Lululemon for a while. We saw what happened to Abercrombie and Fitch, and we know that consumers can be very, very fickle if they somehow tag a company as being sort of, too arrogant.
Yeah, well, but if the company does the right thing quickly and then moves on and does well with their product, it'll disappear. And I think that'll probably be the case in this case. If you have a company that is arrogant, remains arrogant, and it's reflected in how they treat their employees and their customers, then it's a downward spiral.
Millennials are going to make a lot of mistakes because they're not learning history and they're not learning humanities. So we have to realize that we're going to see a lot more of this. And it's really, was it done with malice or was it done out of being naive?
Well, it probably wasn't done out of malice, Paul, but some people are saying, golly, who's filtering this stuff? I mean, at the end of the day, who gets to put the final word? Who vets these products before they're put out to the public?
A lot of it is the advertising agencies. And you go to any advertising agency in America, they're 20 and 30-year-old millennials. These people, they only learned about World War II the 2 days it was taught in high school history class. They're historic illiterates. And the problem is, I mean, Fareed Zakaria has a new book out on this. I think this is an indictment of our system. But, World War II resonates with millennials like the Spanish-American War resonates with us.
Well, hopefully they'll do more history. By the way, George Jameson, Angelique Lucero, and Rick Mack all knew that was Rod Sterling in that picture up there. All right, guys. Hey, my stock pick is next. The stock is on fire. Hasn't always been this way, but is at a new 52-week high, making a massive breakout. I want to talk to you about this because I think you can make a lot of money. Come back, and I'll show you how. You got something to say? All right, guys, let's get down to it and help make you some money. My stock suggestion is a company called Infoblox. The symbol is BLOX. In the last couple of years, it was a grand slam for me, then a grand disaster. Now it's back to being a grand slam again. They've beaten the street in each of the last 4 quarters. I mean, really beaten them. To tell you how bad they beat them. In the last 4 quarters, they beat consensus by 133, 267, and 80% above what the street thought. Why? They've got a really great, unique situation with their IT infrastructure and what they call their DDI solution, which creates this virtualization environment and also for IP addresses. It's an amazing product. The adoption of it has been absolutely phenomenal. It's for hybrid cloud stuff, network automation, serving the DNS markets. Over the last quarter, revenues were up 11% quarter over quarter, 22% year over year, but the margins are going up nicely. They're at 80% on the gross margins, and they're starting to bring money to the bottom line. I love this name. It's been as high as $47 back in October 2007. You're looking right now what I call a true breakout. What's that? When a company moves to a new 52-week high on better than average volume, I think it goes to 30, and I think it even goes higher than that. Matt, what do you think of this one?
Well, the plan that it has is fantastic. Technically speaking, you can't have a better looking chart, but then when I look at the fundamentals, I'm a bit concerned. They made 34 cents a share last year, only predicted to make about 31 this year, 41 next year. If they keep coming in at 80 to 100%
41 is pretty good, no? But you want to double.
For this valuation, forward PE of 62, you need to have a better earnings growth. But if they come in, like you said, 80% higher, 70% higher, then I like it. But technically, you can't argue with it.
That 31 cents 2005 to 41 cents 2016, that 33% growth is enough for me, and it's a very sweet spot in networking equipment and with these IP addresses. Yeah. I think we're looking at it to put in our newsletter.
You know, Steve, the stock's been all over the place. Again, it was a grand slam for us. Then we got hammered on it pretty good, and we're up nicely on it now. And I think it continues to go higher. How do you handle a stock like this? Because I noticed that you watch movements minute to minute, and right now you've got to at least like the movement on this stock.
Right. No, I have to say that. And listen, I don't know this company not nearly as well as you do, but it is Lazarus, right? It's back from the dead, and it seems like it's going to do fine from here. But I will say more generally, technology, and I'm skeptical stocks on the whole, but U.S. tech is trading great. If you look at semiconductors, you look at Apple, you look at biotech, the price action is fantastic. So if you are going to be invested in stocks right here, I think U.S. tech is the place to be.
Yeah, I mean, a lot of names I've had on this show, guys, are up huge. SWKS, I don't know if you guys, I know a lot of you guys are in it. We took profits on half, let the rest ride from here. It's a grand slam. Now, let's shift gears a little bit because Jay-Z may have 99 problems, and most of them are coming from his online music service. So far, Tidal has been a tidal wave of a disaster. And I'm going to tell you why he probably should just stop complaining in 3 minutes. You don't want to miss him because there's a lesson on economics in it, too.
I got 99 problems, but a bitch ain't one. Hit me. Years 94, and my trunk is raw. In my rear view mirror is the motherfucking law. Got two choices, y'all. Pull over the car or bounce on the devil, put the pedal to the floor.
Well, dissing his critics and pointing out that profits and money made by moguls selling their products to the masses, JC also proved my theory of trickle-up economics. I got to tell you something. In this era of fair share and redistribution of wealth, the big question for 2016 and the central question is going to be for a long time, which economic system do we currently live under and what economic system should we live under? Now, recently, the uber-successful rapper and businessman, Jay-Z, he's been under some pressure. You see his latest venture, Tidal, well, it has totally crashed. I mean, this thing has been an absolute disaster, a tidal wave of criticism, fleeing customers, and a free concert now. The Sun has shore up the service. Jay-Z broke out in a freestyle rap that hit on those questions about him on this venture, about him making money by overcharging and things like that. So he got a little bit upset. He says, well, you brought 9 iPhones and made Steve Jobs rich. Phil Knight worth trillions. You still bought those kicks. Essentially saying, hey, you guys don't mind making these people rich, what about me? But the bottom line is that poor people are always going to be in a rush to give wealthy people their money. I call it trickle-up economics. You want a great example of it? Every Thanksgiving, after eating all that food, what do people do? They rush out and give away their money. It's what really makes this economy work. As for what wealthy people do for society, particularly for critics of capitalism, I would say a lot of people who don't like capitalism probably would applaud the fact that Jay-Z has bailed out a lot of people arrested during those Baltimore riots. I personally wish he would have bailed out those businesses that were burned down. Jay-Z should discard the diss because his 99 problems, well, the most essential is the Tidal business model. He just charges way too much. So fix the product and people will actually want it. All right, guys, I love when these guys who sort of have it both ways, they always get the free passes when it comes to capitalism. They could, Jay-Z could walk through a Wall Street, through the Wall Street protests we had a couple of years ago. I had a big argument there with the guy from Rush. And the same thing. What's the Wall Street thing? The big thing when they camped out in the park. Occupy Wall Street. These guys can walk through there. They can get out of a limo and walk through there. So they can have it both ways. Finally, though, I think Jay-Z pushed it too far. He's charging these kids too much money, and they don't want it. And he's upset because, hey, how dare you make Steve Jobs a billionaire and not overpay for my service?
Well, he's trying to play that one side, but at the same time, like you said, he's raking everybody over the coals. I mean, there's been a couple other, rappers that have tried to do the same thing. Say they're looking out for the people that they grew up with. At the same time, they're fleecing them and taking their money as if they don't need enough money, and at the same time putting down Wall Street for doing the same thing he's doing.
Yeah, how many different industries have you seen this happen in? Whether you're talking about a businessman like Kozlowski or a money manager like, what's his name? I'm having a senior moment, who went to jail for stealing. People get to a point where they get so rich and powerful, they get ungrounded from reality, and they push the envelope so far that they fall off the envelope.
You know, here's the thing too, Hillary, that I would say is like I don't listen. I want Jay-Z to try to go in as many avenues as possible and make as much money as possible, but I think he's trying to have it both ways here, and I think that's where he's making a huge mistake. But he does prove one thing: the average American does make wealthy people wealthier. And you can hate capitalism all you want, but that's the way it works.
And he's a capitalist, he's an entrepreneur, and I do have great respect for what he has built. But at this point, the economic model has to work. And business only works. The consumer is happy and feels there's a benefit. And in this case, the benefit doesn't outweigh the cost.
Did you cancel your Tidal subscription?
Look, Jay-Z is a businessman now more than an artist. He was doing nothing more than trash-talking his competition. You know, this is no different than Burger King going after McDonald's.
I hear you. Leave it to my man to put it all in proper perspective. Steve, we'll get to you in the next one. Time now, though, for the marching orders. Actually, I want to go to you first, Steve. I want to talk about consumers, right? We had a litany of retail earnings that are coming out. We want to see where people are spending or if they're just spending at all, because after the close, Urban Outfitters laid an egg. They missed on the top and the bottom line. Look at that stock. That is getting destroyed. I'm glad I'm not in it. Now, some would say, listen, don't worry about teen retailers. They're too fickle. That's not your sort of gauge for or proxy for consumers. Consider that this morning, Ann Taylor shares their surge. You're looking at this chart here, right in the middle. That's Spike, that's Ann Taylor, but on top is the retail index. On the bottom, Harley Davidson. What is the better proxy? And while we talk about that, also remember tomorrow we got Walmart, Home Depot, and TJX. You know, Steve, you often put out a chart comparing Harley Davidson to the S&P as a sign that consumers have run out of money. Do you still stand by that?
Charles, I do. I think Harley, by the way, a Harley motorcycle is the very definition of consumer discretionary spending, right? Nobody needs a motorcycle at all. You certainly don't need a Harley, which is a very expensive motorcycle. The fact that Harley has fallen out of bed, and it has, its stock, over the last few weeks, I think is very, very concerning. It tracked the S&P for years off the 2009 lows all the way until very recently. Now it's fallen out of bed at the time the S&P is hitting all-time highs. I think Ned Harley might be telling us to be careful right now.
No millennials or young people aspire to buy a Harley anymore. That's old, that's dead, and nobody wants to. The wives and girlfriends won't even let you get on a motorcycle, let alone waste money on a Harley.
I wonder what happened in Waco may not help them on the public relations image either.